The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Morning, everyone. Basil Chapman, Tiger Technicians Hour on the second day of February. My pleasure to be here. Thank you to our hosts. And hopefully we will keep that standard up for this show. Dow's up 14 at 19,908. S&P is up 3 at 2282. Comp index is up 10 at 5653. VIX index is down under 12. It's at 1176. Down 5 cents. That still shows buying pressure there. Now, the E-mini had made a peak F. I suspect that this is a peak F top for now. We can have a rally higher than the 278 area we're in now. We can go to the mid 280s. But I think that this is going to be chop, chop, chop. Now, is there a chance that we could chop, chop, chop around here for the next 2-3 days, 2-3 sessions going into next week? And the next week we make a leg D in the weekly chart of the E-mini. So let's just run this through here as an idea. Look, the Dow has made, where did it go? The Dow has gone to INDU. Dow Industrial Average has gone to a peak C if there's no new high above 20,125. It looks like it's really tough to do in the next day and a half. Seems to me there's a chance that maybe next week we make some kind of a top, leg D. And what happens when you get a situation like this? In fact, let me just clarify it. Let me show you something here because I don't think there are alternate counts. To me, this is very clear. This is an A, that is a blue B, and that is a C. And if we get a D, very often, the quicker we go from a peak A to a B to a C to a D, especially the B, C, D part, the quicker you're going to get a pullback. Now, I always say that it's a pullback. It doesn't mean to say you're going to have a major, major decline. You could, but really what you start to see is that the speed of the upside kind of determines the amount of buying pressure. And as a result, it runs out, and then you have to find the key support level. And really what you do is you see a pretty sharp pullback, but I don't see any. I mean, 90,747 is the 9-period moving average in the weekly, but I would not be surprised. Let me move this away right here. This is the Dow 120-minute chart. I wouldn't be surprised if the 19,500 to 19,200 period area becomes a really strong support level because there are a lot of people that have missed this move completely. So money is out there. Money waiting to buy, I think, is out there. What happens is when the news suddenly gets very bad, then people hold off that plan to buy. All of a sudden, the buying doesn't look so attractive, whereas if they just stuck to their theme, which said, I've missed a chunk of the move, I'd like to get in a little bit deeper. I don't have to get fully in, but I'd like to get deeper than I am right now. I'm waiting for a pullback. Very often the rally and the volatility index starts to give you a signal that says, ooh, this is not good. And the news just comes right across the media and it accelerates the move down. And that's an emotional move. On a purely pragmatic level, I would suggest that mid to low 19,000s is an area you want to start looking to put your IRA, the money, the longer term money to work. That's just the way I'm looking at it right now. At the same time, I think the upside is limited. Can you get a new high above 20,125? I don't know what it's going to take. We could. In other words, do we get leg D in the weekly chart? Remember the Chapman wave, we're always looking for the fourth highest peak. Do we get that move now and then get a much deeper pullback and longer pullback in time and price? Or do we get the pullback now and then have a spike up to D, and then we have to decide whether or not there's going to be a high-level consolidation and then go to E and F or recycle, whatever it is. Meantime, back at the ranch, what we're looking at is the doji candle in the monthly chart, which I cannot just dismiss. The doji candle in the leg D says, hey, keep that in mind that you need to close decisively in February. Yes, in February, you need to close above 20,125 to be able to sustain the up move. You close below the low of last month, which is 19,677. That suggests further weakness. And then you're looking at the low of the candle of 90,138 of December, maybe as being something you look at. So in the meantime, some buying pressure here. This is a very interesting market. You've got some stocks that are just taking it on the chin. Bam. The next thing you know, I had a stock, we were short this, we shorted almost at the exact high within pennies. This is Edwards Life Sciences, tissue heart valves and related repair products. I've been saying, hey, this rally could be quite good. It could take you to the 200-period exponential moving average. So we got out, we shorted at, you know what, I can't even remember. Let me see what it was. We shorted, where did it go? It was love. So we shorted it at 121.41. The all-time high was 121.75. And then we got out with a 30-point gain, 24%. And then I said, okay, let's just hold on. We want to wait for the rally. I completely forgot to look to see when the earnings report was out, because yesterday was a perfect time. It hit the 200-period moving average. That would have been the ideal place to say, maybe just a small short in case we're wrong, and there's a good report. But it seemed to me that something was wrong with this company. So earnings come out, I don't know what it is. It's down 8.95, down 9% at 89.06. And yet, look, if you really want to look at the price and say, oh, this is looking so good, I've gone from 99 down to the 93s, rallying up to the 97, 98 area. That could be quite good. It could be the start of a brand new move. But look at the stochastic and the MACD. That was so weak. I wanted to see a deflection lower. Did not know about the news. Would have been nice to grab it back again as a short. Anyway, that's the way it is. A miss is as good as a no trade, right? So here we are, Edwards Life Sciences, EW down 89. And that's what I was just about to say. That I'm finding it a little bit difficult now because we have very tight stops. I'm finding it difficult to hold the long positions that I wanted. For instance, we were long BRK.B. And this was more an economic thing. This is Berkshire Hathaway, Buffett Enterprises, all these different things. This we were sure along the Berkshire Hathaway B shares. Got in right there at the 100 and I can't remember anymore. 161.80, just a small position. It did okay. It went all the way to 165s. And then because it didn't break out, it's this Chapman wave falling wedge with the resistance there. I just didn't want to mess around. So we're out of it now. And it says to me, we've got to keep in mind that some of the really fabulous stocks, and look at this monthly chart of Berkshire. It's really great. I believe it's a leg C in the monthly, peak C in the monthly. I'd like to get into it at some point because if the economy is doing well, Berkshire Hathaway should be doing well. So we're out. We'll have to come back again. Took a 1-point gain. Big deal. All right. I'll be back and we'll go through the numbers when we get returned. Just let me say that as we're looking here, I'm watching gold really closely. It was up 20-something. Now it's up 11 at 12.19. I went to a higher high. We'll have to talk about that. Also AN, which is going to be really good. And AN is AutoNation, auto sales company. And I want to look at that.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So I don't want to lose my train of thought because I had a whole bunch of questions, emails, all that stuff during the break. So of course my mind has already moved 6 degrees to the north. I'm looking at this. I wanted to show AN, which is AutoNation. AutoNation made a high back in 2015 up in the 66, 67 area, plummeted down in 2016 to the below 40 and is now trading at 52.38. This guy is usually right on top of it. He always gives it. I love his analysis of what's going on in the auto area. AutoNation sells cars. Now, in the daily, earnings come out tomorrow morning. I think it's before the bell. I've got this as probably a peak G based on my notation, but it's G/C, so there could be one quick pop-up above 53.74. What I want you to really say is, if AutoNation gives a real bad report, and if we're looking at Ford, which it cannot get out of its own way, 12.33. If you look at General Motors, cannot get out of it. It's made a peak E top back in the 38 area. It's at 35.70 right now. Peak D in the weekly chart. Monthly chart has improved a lot, but it isn't holding the price. If you look at FCAU, which is the Fiat Chrysler, had a whopping peak G decline. That was where Trump said something about taxes or whatever it was. I don't remember, but the fact is it had a good rebound, and it's holding in the 10.90. I still think that this is the one area where we've got a dealership just about a mile away. And whenever I go by, I see that they are just moving cars. I haven't gone in, but I see that they have the Fiat. No, they have the Chrysler products. I'm not sure if I've seen a Fiat on the lot. Maybe there is. But what's most important is they got the Jeeps. And the Jeeps are just, everywhere you look, people are driving Jeeps. They are really popular cars, even though Consumer Reports never gives them a very good, favorable rating. But they seem to be the cars. I was in one recently, and it was just a smooth, very pleasant ride. So they're selling, and that seems to be reflected here. But I want to see what AutoNation says, because I think it's going to give me a much better sense of a much better sense of the overall picture of the industry. Because quality-wise, remember, I went to the auto show. I said you can pick the cheapest car there, and it should serve you very well. It has all the accoutrements that you look for as basic things, and that's really what's happened. So I'm not going to do it today. I hope I can put it in for tomorrow. I want to talk about leapfrogging And leapfrogging is, I think every industry, someone remind me, please, tomorrow during the show, every industry must be afraid of Airbnb or maybe it's a Lyft or Uber, that leapfrog of you spend like the battery industry, you spend decades spending a fortune, and then somebody comes up with an idea. I wonder if they're going to do an Uber in the stock market in another few years. Somehow, somewhere, someone comes up with an app that says you can bypass everybody and just do this independent. Can you imagine what would happen? All right, let's get back to our story. So AN was what I wanted to look at. And the other one was that we were looking at gold. I said I'd look at gold. So gold made the spike to the upside today. And the GLD did the same thing. The GDX did the same thing. The XAU, I'll show you, I want you to keep looking at the left side chart. The left is the daily, middle is the weekly, on the right is the monthly. I want you on the left. The XAU and the HUI have all made this leap to the upside, and yet in all cases, the technicals, the veracity of the technicals, just not quite confirming it. This leap, this gap up. And I always look at a gap to the upside as a gap to a peak F, especially if it's a leg F, especially if it's on a Friday. Well, today's a Thursday. I get a little bit nervous because that's often some kind of a topping action. So I'm going to be watching this real closely. And here's the reason why. So gold, did I say anything? Yeah, I said gold was up about $11. The dollar, now let's go to the dollar, because if you look at the dollar, DXY, look at the dollar. The dollar has just gone very steadily in a pattern that you can look at tens of thousands of charts. And there are not many periods where there is a steady lower highs, lower lows, lower high, lower low, lower high, steady move to the downside. You'll find it if it's a very narrow channel. But when the channel's fairly wide, when the price movement is quite big, and the 9-period exponential moving average has been an incredible barrier. In other words, if you were short the dollar from the day after the peak F high, the one that calls it a peak E high, that right there, that was a peak E on the 3rd of January, and you treated the 9-period exponential moving average as a cover on the close only, you would still be short. Remember, my expression was the dollar, my terminology was that it's in the 99s. A close 2 out of 3 sessions in the 99s starts to make me real nervous. Well, look what's happened here. 99.51 close on the 31st. The next day was the 1st. It closed at 99.64, and today it's at 99. Well, it's trading at 99.47. The reason why I said it'll make me nervous is because it would certainly impact the weekly. And now you can see the weekly. There's just no question. I have no choice but to call this a peak G in the weekly chart of the gold index. And now I can put a down arrow because the MACDs, even though it's not Friday yet, the fact is you've closed 3 times under the 9-period moving average. The MACD has turned down. The stochastics way at 62%. That makes me nervous. Remember what I had said. It's not the daily. The daily is the one that's going to give me the information about the weekly and the monthly. And the weekly says, you've made a peak D top. Wait, why have I called that? Oh, that's because that D is actually a D/C/EF. All right. Let me figure out what's going on here. Why did I call that a D? Did I mean to say that it was a G? Yes, that's what I did. I don't know why I did it as G. It's a G top. And that G top, because the MACD held all the way through, tells me that you've got to now be careful because remember I talked about my webinar, the 3 webinar series. The last one was talking about the influence of the shorter term to the next longer term to the next longer term. So the daily is the rudder that's telling me about the weekly. But the weekly has had a single leg A to the downside. I happen to have done a lot of work on the waveform to the downside. Remember, I always say on the upside, we use the letters as faithfully as we can. On the downside, I use the letters, but they guidance letters. They mean something else. And they also imply that you've got to be looking at the technicals, because I get buy signals based on other techniques. But that takes me to the monthly. And we've started off the monthly way below 103.82. So the dollar index is really going to be something very important. And I'm going to keep that in mind, because the dollar trajectory overall has kind of mirrored the market. So the market choppiness for a month. Now we've seen the dollar decline. Is it ahead of the game? Is it telling us something? We'll go to Scott in Safety Harbor when we get back. The Dow's down up 5, S&P is up 2. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and I just want to do this. Euro dollar is at 1.08. It is in the same thing as the gold. It's in G/C. This is going to be very interesting because I wanted to mention that the dollar has made so many troughs that it could very well, at this point, have a spike to the upside, and 100.38 would be the test. If it goes above that, it could last longer as a bounce. Let's go to Scott. Hi, Scott. How are you?
Hey, Basil. You got to give me credit on that CX trade I made last week.
Very nice. Very nice.
Right after I mentioned it, it blew topside, and so you had a downward spiral on it, and I get that. And, I took about half your advice on that. I went in with just like 20,000, but it did spike up, and we got an 80-cent pop in it. So that was great, and now it's back down. I think it went to after hours yesterday at 9. I got back in, but what I'm calling, how about my Facebook trade? Went from 117 to 134. I mean, I'm out of it now. I got out of it at the 130, but wow. If I had been able to figure out that options that you were talking about, you realize what of that? I mean, oh my gosh, 10,000 would have brought me like $100-something thousand.
That would have been very nice. A good payday, sure.
Yeah.
So,
all right. So the options. But what I want to ask you about is X. What we got with X now is we've got all kinds of great things. Trump's not going to let Chinese steel in. He's got the infrastructure going. It's got earnings, which came out yesterday. It's green light everywhere, yet it's just stuck on the 32.
Okay. So let's, that was an interesting sound. Okay, so this is, folks, we've got a brand new leg A up in US Steel. We tried it the other day to get tiny loss on it. You know what? This is the pattern that I'm talking about, that it is rare. You can look at thousands of charts. It is rare that you see it's happening so often. I always talk about chart patterns, that it is ironic that you look at a chart pattern and it'll be, say, in this case, US Steel. Look at the same thing. I'm not going to tell you what it is, folks. Just keep your eye on the same left side chart. This is the day. Tell me what this is. You can't tell me what it is. It happens to be the Russell 2000. What does the Russell 2000 got to do with US Steel? I could go on and on with these things. That's why I wanted to mention that the dollar, this pattern doesn't happen very often, but when it does, be careful, because the spikes to the upside can be really sharp, really sudden. Then you have to reassess, because sometimes it's a single leg A up just to release the tension of all the selling and to cover some shorts, and then it starts back on the downside trajectory. In the case of US Steel, I'm looking at something a little different. I'm looking at the monthly chart that's telling me that unless US Steel breaks under 29 and holds under it for about 2 weeks, it's a stock that's in play. I think you've got your eye on the prize here. I think US Steel, there'll be good news and bad news, but basically what we're looking at is if US Steel trading at 34.14, up $2.83. And funny, it was on my list, and I thought, you know what? I've got to give it another day. I want to see how in leg E to the downside, matching what so many of the others who have had the same sort of move. As I say, the IWM is trading. This is, I didn't put the trough in A, B, C, D, I believe it's D or E to the downside. So many of them say that be careful, because it could be a little bit of a pop-up. So let's go to US Steel. I like it. You know what I'm going to, this is, I haven't mentioned this on US Steel for a long time, other than when you were talking about it earlier on. And I said your idea of getting in and out is good, but try to keep a position that you can hold a little longer. I'm going to suggest to you that whatever you've got now, if you can take just, even if it's a small part of it, it's just worth the risk. And I'll tell you why, to hold. The reason why is if US Steel breaks above 35.83, which sounds like a lot, but it really is not a big deal.
No, it's not a lot for US Steel. No.
Right. All of a sudden, the monthly chart with the candle of the week of the 27th of January that has a high of 34.90, I think, 34.94. If it can go above that, you suddenly have a slight change of trend, which is going to help the MACD. And then this stock has the potential to try to go back to the recent high of the 39.14 area. So
I agree with you entirely, but I've been in and out of it the last couple of days. It's got a trading range in the 32s to the 34, but I know what you're saying, and every day I cringe when I sell it. As a matter of fact, I just sold it 2 minutes ago. I cringe every time I do it, because one of these times it's not going to stop at 34.
Right, exactly. But that, you see, it's different. If I want to, in a situation like this, I want something that's in play. What I mean by in play, I had an email from Warren mentioning the EWW, which is the iShares MSCI Mexico capped ETF. And he thought it was a good short. And I said, I'm going to do it on the show, but I would not be thinking of it as a short until, and of course this is Mexico, so you think, oh boy, Mexico, there could be problems. But I have to tell you, Mexico, the EWW is actually held very well considering the news that's come out. So if you can divorce yourself from the news, what I said is, if EWW breaks the 44 to 43 support, closes under it, then I think, okay, now it's a problem because it's got that single leg A in the weekly.
Well, you mentioned something, Basil. You mentioned the term in play, and I think you really hit on something there. You know, I used to deal a lot with potashes, you know, and I still watch it, but it's not something that you know, everybody is batting around back and forth. And it's, in other words, it's not in play all the time.
Correct.
And X is, and whenever you have a ball game going, you're going to have a certain amount of people that think this way, and that yin and yang obviously is what we want. And yeah, you hit on it. Find something that's in play.
Right. So, okay, Fletcher in the Den says, X is planning big cap spending in USA may slow down the stock. Yep. I mean, there are a whole bunch of factors. What I am saying is that because when I say in play, it means that it's the whatever the catchphrase is must be in the media constantly. That's what I mean by in play. And U.S. Steel is.
Exactly.
And
I call it the public perception, which is one of my 5 criteria. Now, I have
come from advertising,
all of my criteria right now. It's past inspection on all of them.
So you're in media. You understand media. You understand advertising. So it's the word. In other words, I don't want to get into it. I could talk about politics and the media. I could talk all day about it. That's not the issue. The issue is that when you say when I say in play, I mean that it becomes, until I'd said this about Clinton and Trump. I said Trump needs 3 words, not 4 letters. Make America great again. The again was unnecessary. You want 3 words. People don't remember more than 3 words, and you got to say it over and over. There was nothing you could remember about Clinton. She didn't have a catchphrase. She just needed 1 word. She could have said jobs are back. 3 words.
Exactly. Well, it's just like Apple.
Right.
Apple's obviously in play. It's getting all that in play for nothing. C-Mix is just not in play. Pot is not in play. You know, Facebook, obviously, that should be in the definition of in play.
Right. So congratulations. I like your X trade, but I'm suggesting the next time, I just tell you right now that if U.S. Steel doesn't take out 32 in the next 2 days, it might be one that you want to just buy a little bit and hold it and see what happens and see if it can move to 39.
Also, I did send you that email address. I don't know if you got it or not.
Yes, and I sent you something as well. I'll be back. Thank you, folks. Thank you for calling, Scott. I'll be back straight after this message.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Oh, my. I got some really good questions. How can I do this? What have we got for time? Let me do this. Okay, the questions I had was GDXJ. So that's the only one I left out of all those gold things that I had here. Van Eck Vectors. It's trading at, this is the junior gold miners. It's spiked up today. Now, the question is, what would I call it? Greg in Austin wants to know. Greg, there's a technique that I use, and didn't I write it down for myself yesterday or this morning? And it was called the Chapman Wave Unconventional Flat Base Restart. You know, the words, they always sound so, if I was listening, my eyes would glaze over when I hear it, but it's always explanatory in my work. So what it's saying is that there's an alternate count. This could be a brand new A, all right? Now, almost 3 out of the 5, I think, charts I looked at had a suggestion that we might have started a brand new A. I just don't think we're ready for a brand new A, because A would go to a B, then a C, then a D. I think that we're ready for some kind of a digestion phase in gold. That's what the stochastics are telling me about in all the indices of the gold ones that I'm looking at. So let me just make it real simple. If this is a Chapman Wave flat base instant restart, unconventional one, a lot of words, the implication is really simple, that you can go up a little bit more, but you've got to be careful, because at some point you're going to come back and test 35.45, and it's at 38.85, 35.45. That's 3 points. That's like 9% a pullback. I'm not sure if that's correct, so I want to spend a little more time, but you asked me about what's my wave count. It's unusual. I should put even here a D/A, because that's kind of the way, theoretically, what can I say? I'm just going to say A at this particular point, especially based on the weekly chart. This would be the most incredible move up in gold. If you thought the move up before was amazing, this is going to be even stronger than the move that was done from the low that was January of 2016, week of the 22nd, where it went up to a peak A to 28.94, then went to 25.40, pulls back into a digestive 1, 2, 3, 4 weeks, and then breaks out. This will be an even more spectacular move if that's the case. The technicals in that case, look how strong the technicals were. They're not that technically good right now. So I think that euro is close to some kind of a bounce, and the dollar's going to have, no, the euro, EUR-USD is close to some kind of a pullback in a G/C. It's the same thing. Even if it's G/C, you could have one down day and then go to a D. So I think these successively higher peaks with quite sharp pullbacks, but really higher highs and higher lows, is saying we're getting close to some kind of a digestive phase in gold. It's just a digestive phase, been a spectacular move. It's really improved a lot. But the when I go to the dollar, and really things really a lot rests on the dollar. I'm looking at a trough F potential if there's a higher low tomorrow. The MACD finder, the histogram's improving. Stochastic isn't great, but it says there's enough energy to have at least a bounce to test the 100.77 level on the 9-period moving average, and then we'll have to see. It could just be like 3, 4, 5 days. It could be 2 weeks, but it could be just a bounce. I don't think it's a trend change because of the steepness of the decline, which says that gold could take a little bit of a breather. That's really what I'm saying. Okay, let's make it simple. I think gold is ready for a bit of a breather. And that's so great. I hope that answers you. Chris asked me about the dollar, and she says, could it be an instant restart? Oh, instant restart to the downside? Chris says, Basil, just watching your discussion of dollar DXY, please discuss why not an instant restart. Thank you for all you do. Your student, Chris, in Chicago. So, Chris, this is what I'm looking at. Oh, to the downside? 1, 2, 3. Okay, let's just see. So that was the low of 99.83, 99.79. Yeah. So I'm going to circle this, and I'm just going to suggest it is a possibility. I just do not want to dismiss it out of hand. That would be to the downside. This would now be leg B to the downside. So it's actually E/A, F/B to the downside. And that would make 98.50, the 200-period exponential moving average, really important. You know, the technicals are suggesting, based on the MACD, it really could be an instant restart. Good question, good eye, good study, good student. But I am suggesting that at 10.99 in the stochastic, I'm not sure that we've got room for another week of weakness without a decent bounce. That's what I'm saying. We'll know the full. I'll make it real easy. A close under, remember, a close under 100. I said be careful, 2 out of 3 sessions. This could be the 3rd session. If it closes above 90, above the low over there, above 99.79, that's going to be very important. 99.40. I really should have said 99.43, which is the left side low bar. I'm changing it. I'm making the left side low bar in the dollar of 99.43 the most important pivot that we can look at this particular time. So if it closes under that 2 out of 3 sessions, dollar can do the instant restart down and keep going down. I think it's getting real close to a bounce. That's really what I'm saying. Oh, thank goodness I wrote that in. I forgot about the 99.43 level. I hope that answers your question. Good question. PTC was the next one. PTC. PTC is, oh, I haven't done a notation on this. PTC Inc. You know what? We've got a break coming up. Let me use it for the break. So that's an A, then it goes A, B, C, D, E. I'm not sure what PTC does. On the 26th, it pulls back. It has a retest. Everything about it looks like it should have limited upside from here, 54.70, maybe I don't think it'll go to 55, 54.30 to 54.70. But what's really important is that I think it's going to chop around. And what I would normally do is I draw the cup, then a double cup. But I would grab this instrument right here, the rectangle, saying, I think there could be a rectangle formation here. So if you're long, stay long. If you're long but getting a little nervous, take a little bit off. But to tell you the truth, the weekly looks good. The monthly looks good. Someone tell me if anyone knows. I'll tell you right now what PTC does. PTC is a corporation, Inc. PTC Inc. PTC Inc. PTC Investor Solution provides technology solutions that transform how products are created and serviced, helping companies achieve product and service advantage. That is a field right now that is acting very well. Yes, I would not be shorting this. I'd be looking to maybe buy on a decent pullback. I like it. I'm going to write it down here, PTC, but I'm also going to write down, look at on February 23rd. All right, somebody remind me. Okay, the Dow's down 34, the S&P is down $1.77. We remain short. We've added to the short today. I have to tell you, everything I've done And this includes my 120 that I'm sorry to my subscribers. I know you're going through it with me every single day. We're going through this. I showed you the Dow 120-minute chart. It made the Chapman Wave 5 to the upside. On the downside, we've got 3, and we've just done 4. Under 19,784 starts 5. I think we're going to do that, I said, by Friday. We'll see if that's correct or not. And this is the one, this is the same chart, but with the MACD and stochastic, which are failing. I'll be back. Basil Chapman. Dow down 37, S&P's down 7217.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So let me just do this before I forget, because at the top of the show, while the intro's coming on, I'm always doing my charts and all that stuff, and I'm almost always showing the 10-minute, the 5-minute, whatever it is on the E-minis. And I did this, and I put an F, and then I put a down arrow because it had hit a particular target, left side, right side, price, time match target on the E-mini 10 minutes. And now we've had quite a deep pullback because the Dow's down 32, S&P's down 2. You remember that was a pretty big come off the bottom. In fact, this morning at just before 10 o'clock, we were down at 2266.75 on the E-mini. And then all of a sudden you run up to the 2279.75 level. So something to watch. Now, the other thing that I wanted to mention, and I've got so many good questions here. So let me do this. RL is Ralph Lauren. Ralph Lauren is just plunging. It's down 9.75 at 77.62. Now, you might recall that I discussed this when I was talking about, I think it was the XRT. It was in one of the indicators, one of the sector ETFs. And I said, this is a problem because they make fabulous clothes. They do really good things. And yet it's just pulling back. Remember, I also had a question about, I don't know where it is now, but BBBY. And I'd said, everything about these charts, it's just making me nervous. Well, BBBY is at 39.88. It's holding okay, but it's down from when we were discussing it back in the 40 area, 40 something. And but I had said that I think that BBY is Best Buy Electronics, and that ought to take away 1B. And I think you've got a slightly better stock, and that's done quite nicely. That's at 44.71. You see, in the electronic area, well, those are peak D in the monthly, peak D in the weekly. I think there's more of at least a bounce potential in this area, TVs, etc. Then you're looking at something like Best Buy, Beyond, whatever it is, Bed Bath and Beyond. Okay, the TLT, I didn't do that. I should have done it earlier on. This is my issue right here. It's not the TLT. How much time we got? We got enough time. If I go to the TNX, actually, I should have gone to my charts. You see the TNX is holding. You see this the weekly chart? See the monthly chart? This is the 10-year. It's holding very well. And I've been calling this a high-level consolidation. And my suspicion is that yields are going to go higher. And that the real issue here, I spent some time on this the other day. I said this big major trend line, 20-year, whatever it is, 10-year Treasury note interest rate decline is going to get the test because it's got this pink dashed line right here. If the yield, I said, if it goes to above the high that was made of 26.21, I said I think 27.30-ish. If it goes to 2.73, I think we might even change. We might change direction, and the Japanization of our bond yields. This is a different period we're in right now, and this is saying yields are holding higher. So let me just quickly go back to the question was the TLT at 119.40 can't hold above the 9-period moving average. I think it's making an H pattern. I would not be surprised if it needs to test the low that was made in the 26 of 118.32. So the the jobs number tomorrow, if it's way over 200, could scare the market and see yields go even higher. If it's like 150,000, maybe it's not so bad. So the question, Sarah had a question. I did the RL, and then AMT. I'd like to do this tomorrow. If you can remind me again, Bob asked me about AMT and ETFC. I'd like to do this together with Schwab and Goldman Sachs tomorrow, holding, MTD, Metler, Teladare. Wow, mistake. 435, good-looking stock. AMTD is what he wanted to look at, and that is plunging down 3.33. I want to talk about Ameritrade and these others. We'll do that tomorrow. So make it real simple. The VIX index is at 12.01. If the VIX index pushes to 12.30s by the end of the day, then this market is going to go down deeper, and then we might get that level that I've been looking for my subscribers. We're looking for in the Chapman Wave 3-5. We want to see a close below a move below 19,784 for Chapman Wave 5. Then we might get a bounce. Have a great day. I'll see you with Tom O'Brien later today. Otherwise, I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.